This is the Legacy Wealth Code Podcast, helping you build long-term wealth and a lasting legacy through real estate investing, tax strategies, and motivational stories from some of the most successful and influential people out there. Here are your hosts, real estate investor and entrepreneur, Michael Notbaum, and real estate investor and attorney, Andrew Hook.
Hey guys, welcome to another episode of the Legacy Wealth Code Podcast. I'm here, Michael Notbaum, with my partner in crime, Andrew Hook.
Yo, yo.
So we are excited to have our guest today, Kevin Byrne, another close personal friend of mine. I feel like I'm really surrounded by some amazing people. So he owns Impact Realty here in Tampa, 185 agents, just started it 3 years ago, but really built a huge amount of wealth through flipping over 1,000 short sales and then shifting gears and really keeping them as long-term rentals. So we have him today here to talk to us about short-term rentals and how we see it in the future. And that's something that he's definitely doing with his over 100 rentals that he's currently got. So welcome to the show, Kevin. We're really excited to have you.
I appreciate it, guys. Welcome.
Yeah, thanks for coming in.
Yeah, thank you for having me.
So let's jump in. You've got a pretty impressive track record. I know you're, just to build an agency to that many agents in 3 years is something to, definitely huge accomplishment. But let's focus for a second on 1,000 short sales that you've then decided to keep a good amount of them and what that's done for your wealth.
Yeah, no, I appreciate it. So I took a very traditional path out of college and got my degree in accounting and was doing that for one of the big companies for a long time. And I was bored. So I wanted to shift into something that I thought was more exciting. So, I read Robert Kiyosaki's book and just decided to start flipping houses. And I picked about the worst time you could do it because it was 2007 and the market was going straight down. So I learned about distressed properties, and specifically at that time, there was just a huge short sale market. And we got in ahead of that, built systems to scale up, and we were buying them and selling them and making adjustments because the rules were changing constantly. And so we adjusted, along the way and built up a nice little income. So
Well, it's funny because I've got a list of questions I want to talk to you, and we do this totally unscripted. What you said just now is something that I think anyone listening to this should really take a second and really realize. You just came into real estate. You had no experience. The market then shifts. So you're thinking when you're getting into it, just like I can remember that time I bought my first house, and before I closed on it, it was worth 40 grand more than I bought it for. And I'm thinking, I'm going to be so rich soon. And then everything came crashing down. And you said you pivoted and created systems and tools to really thrive in that new environment.
Mm-hmm.
So, that's something extremely significant to think about for a second, because you could have just folded up shop and didn't.
Right. And it was a very difficult time because right now, and we've been very blessed over the last, 10 years, if you will, where the market's gone up. So if you're an investor coming in and you're screwing up or things are happening and your rehabs are taking longer than expected, or, you're making, newbie mistakes, the market has been correcting that for you and you've been still able to make money. Whereby at that point in time, when I got started, the margins were compressing significantly every day that goes by. So we had to be very efficient when we were turning these things, and it worked out well. But all good things come to an end, and things got tight, so we shifted. Basically,
I guess that's where being the boring accounting. When you apply those same principles.
Work,
Like, listen, there's no feeling involved here. It's just, does this make sense? Yes or no?
When I started doing it in 2007, we were probably averaging about $25,000 gross profit per flip. And when I quit doing that in about 2011, I was probably averaging 7. So that's when I realized I could just get a real estate commission and make more money than I was taking
with
all
a
this
lot less risk.
Right. And so that's why we shifted away from that model. But
Well, it really drives home the point too, I think, about like the adaptability, right? It's the people that can pivot and make that situation into something greater. And we hear so many good success stories of people that have overcome the tough times. And that's just such a cool point, I think, always. Every time we talk to anybody who's really excelled, that's one of the main things is like, I started here, now I'm here. So.
Right.
Yeah. So today's episode is really going to be around short-term rentals. I asked you to be on. I was going to ask you anyways, but I saw one of your posts the other day, and you had a pretty Very well, I would say your answer was heated in a way that I think a lot of people just think, oh, I'm going to buy a property, I'm going to throw it on Airbnb, and I'm going to make a ton of money.
Right.
Or I'm going to find somebody else's property, rent it from them, and then make an arbitrage spread, which is probably a whole nother episode. But there's this idea that this is just going to be this automatic path to wealth. And I would say that you agree and disagree.
Yeah, it's certainly not as easy as people think it is. That's for sure. And I've been watching the growth in this market and this space now for the last couple of years, and it has just absolutely exploded the last 2 years and really the last year. And I think that it's although it seems like real estate, it's really hospitality. And I think people are mixing the two up. You're really running a mini hotel. You're not taking a residential property and turn it into, an investment. So you have to really understand what goes into that in order to be successful. And it's just become so competitive right now that when I see posts on Facebook and social media and unfortunately, I am a real estate broker, but I see a lot of residential realtors out there posting things and they really don't understand the mechanics behind it. And I would hate to see them put themselves and or their client in a situation where it didn't turn out how they thought it was going to because they didn't have the tools and resources to actually give, quality information. So
well, I think I know the answer for what you're going to say, but I'm curious. I want to ask it anyways. And the competitiveness of the whole short-term rental market, I think, drives this. But I've seen a lot of stuff lately that goes to, what do they call it? Clickbaity type stuff where it's like, oh, the short-term rentals are dead. There's no more market in this. It's totally saturated. What's your response to that?
That's a great point. So the Airbnb bust is out there, right?
Mm-hmm.
So that's what people, and I didn't believe it. And I didn't believe it because I thought I was better than I actually was. Okay. And what I mean by that is that the market that was created, through COVID and just by virtue of this industry exploding and us being in Florida, which happened to be one of the states that everyone traveled to the last couple of years, I was good because I was in the right place at the right time, not because I had the skill set to make me good. And I realized that right around the end of last year, October, November timeframe, when I looked at one of my properties, I have a portfolio of several, but one of them, and I remember looking at it on the first of the month, and I had 0 bookings that month, not a single booking. And this was a property that did $6,000 to $8,000 a month normally in bookings. And it was eye-opening where I had to look myself in the mirror and say, what do I need to do to adjust right now to make this work? Because I've got $500,000 invested in this property. And so what I did is I learned the proper tools, techniques, and how to, price strategy and optimization, and added additional amenities and did what I have to do. So by the end of that month, I was actually 90% occupied over the course of the entire month. So while the media and there's a lot of buzz around, is it oversaturated and is there a bust going on? The answer is it's becoming extremely competitive. But for those people that are willing to either invest the time, the money, the resources to learn how to properly do it, or hire someone to do it for them, a property manager to do it for them, there's still an opportunity. So I believe that the short-term rental market right now is a very, very risky market to be in. However, there's still great returns for exceptional operators.
Mm-hmm.
Well, when you have, like you said, perfect timing, the perfect location, these people came into it getting Ritz-Carlton rates and giving Motel 6 service.
Right.
And so you're saying if you want Ritz-Carlton rates, you have to have a Ritz-Carlton service.
Absolutely.
And experience.
Yeah, absolutely. And marketing and all of it. I mean, I hear stories across the board. You've got 2 identical properties literally in a duplex next to each other, and one is crushing it and the other one is not. And it's because of, all kinds of different factors that go into it. But, the marketing, the optimization, the photos, the amenity, everything that goes into it. It's just, it's not real estate. It is hospitality.
Yeah. And I definitely want to dive into the tools and stuff, but I want to go all the way back to when you're analyzing a deal.
Okay.
And because the way I've always been taught and what Andrew and I do ourselves is, can I operate this as a long-term rental and be cash flow positive? And if I check that box, then I can explore the idea behind short-term rental. And that just allows me, if regulation changes, if something else changes, or if, you run into an issue where there's 100 other properties in the same neighborhood, all of a sudden, maybe it makes more sense as a long-term rental or like a nurse program, et cetera. So what is your process on analyzing a short-term rental?
Yeah, that's the exact approach that I take as well. So you want to put yourself in the worst case scenario. And what can you do if market conditions change and you've got to shift and hunker down a little bit? So even when you're looking at a property from any investment standpoint, I'm looking at multiple exit strategies. So if I'm looking at a property and I think I'm going to flip it, I'm also analyzing the long-term rental market, even on the flips, because if the flip doesn't work, what can I do to rent this property? And, where am I at with my operating expenses and if I've got any debt on it and whatnot. So I'm always looking at long-term rents on every single property, flip, rental, and short-term rental. So on the short-term rental market, it's exactly what you said is how is this asset going to perform in a long-term strategy? And if it checks that box, then yes, operated short-term rental should do 2.5 to 3 times that under normal market conditions. Now, since the last year, we've had, double the supply and, a slight increase in demand. Those are not normal conditions. So you've got to make some adjustments there. But absolutely, when you're analyzing the short-term rental acquisition, you absolutely have to run a long-term analysis on it.
Cool.
Yeah.
You mentioned management. Do you self-manage? Do you do that through the brokerage? How do you structure that?
Okay, that's a great point because there's a lot of risk associated with the management as well. So I have a team that I have people on salary under my team that self-manages our properties that I own. And we are doing third-party property management through my real estate brokerage for third parties. Now, there's a lot of folks out there that are managing Airbnbs. And if you are at least in Florida, if you're a licensed real estate agent and you're not a broker and you are accepting money that it does not belong to you, then you're committing a felony. So you should not be doing. There are proper ways to go about doing it, but if you are a licensed agent, it needs to go through a brokerage and a property management company. So yes, we do that, and then we've got there's insurance issues associated with that as well. So
now let me press a little further on that. On the management side, your brokerage services that you provide that on a third party basis, do you do long term and short term?
Correct. Yeah.
And are they the same people doing both, or do you have certain people designated on short term versus long term? And what would you say kind of those refocus points are at that point?
No, that's a great question. There's some synergy on the repair and maintenance side and some of the systems as far as utilities and vendor management and things like that. So there's some synergy there. But as far as the responding to guest inquiries, the staging of the properties, the optimization and the marketing of the properties are totally separate teams because it's a totally separate industry.
Yeah.
So,
okay.
Yeah, so we do have some synergy there, but not.
Yeah.
Well, and you got to have somebody that kind of sees that as a hospitality type position, right? So, I mean, if you want those rates, you want somebody that's going to give them the guest experience that's going to get you 5-star reviews and not just my toilet's broken. Can you send someone over?
Right. And to that point, it's a different type of maintenance call for a short-term rental than it is a long-term rental, right? Because if you have a long-term tenant and the toilet breaks, okay, you don't necessarily have to respond immediately or you're going to lose immediate revenue. What you don't want to do in a hospitality situation is the toilet breaks and it's a $250 fix, but you delay the response time on that, and all of a sudden you're losing a $1,500 booking because you have to refund them their money. And I can tell you on the short-term rental client, they will complain about everything. So you have to be on top of your game.
Is there any other type of guest?
Yeah, that's right. That's right.
It's funny because every time I stay in one, I'm like, I don't think I've ever complained about anything. And now managing Airbnbs and friends having them, they're like, it's incredible. Like people complain about everything.
Yeah. And you really have to know how to navigate that and the channels. So, Airbnb's got their own system for responding to complaints and refunds and reviews and whatnot. And VRBO has their own and Booking.com has their own and whatnot. So you have to understand how to manage and navigate those channels as well to make sure that you are not losing out on revenue in that regard as well, because people will say things and do things and you have to know how to respond to make sure that you're not forced into a refund when you don't have to give one.
Yeah. All right. So now you've got a property that you've bought. What are you using tool wise to forecast what kind of revenue you're going to get from it?
Okay. Yeah. Great question. So we've got pricing software that and it allows us to do hypothetical situations on certain properties. And it really depends if it's going to be a property that I personally own or if I'm managing it for a third party, because you're working within different budget constraints. Okay. I'm using software that will look at the average nightly rate and look at occupancy percentages and whatnot. And then I know how I operate to whether I'm doing above or below or whatever. So I'm making my own personal adjustments to come out with a monthly amount. And it's very similar using comps and using, it pulls data. So there's a lot of them out there, a lot of different pricing softwares out there. And so that's what we use. And then I'm conservative. So that's the CPA in me. I like to under promise, over deliver. So I'm using various assumptions and just making sure that, that it pencils. So
the software that you use, is that projecting kind of like elevated events? And what I mean by that is like I used the Super Bowl, for example, a couple of years ago, hosted here at Raymond James, and those numbers go crazy, of course.
Mm-hmm.
If you're not looking at that on a calendar, 6 months in advance, knowing, hey, that's going on. Is that doing that for you on that software?
Yeah, that's a great question. So speaking of that, the Super Bowl's coming up this weekend.
Yeah.
And I just read an article. The Super Bowl is in Phoenix this year. And
same time as the Waste Management Open.
Same time as the Waste Management Open, right.
Unbelievable
which
weekend there.
Has 700,000 people apparently that attend that. So it's like the largest weekend in Phoenix ever. And they are 50% occupied. Short-term rentals are.
Wow.
So they're getting crushed right now because of oversupply. So it's all supply and demand.
Wow.
I mean, I think I read that article yesterday. So to your point, I'm going to give you a different example. Here, we're in Tampa, and I was just randomly looking at my calendar, and all of a sudden one day, this was probably, I don't know, maybe a month and a half ago, all of a sudden, within about a 2-hour period, I had this random weekend in April that just got book. Every one of my properties in about 2 hours got booked for this random weekend in April. And I'm like, what the heck is going on right now? And I just Googled events, and it was when Taylor Swift announced she was coming to Raymond James Stadium, and literally every property I had got booked. So the software that I have, yes, and that I use adjusts for events like that. It did not adjust for Taylor Swift fast enough.
Okay.
I
So
was going to say it's all based on demand, but if the demand happens like that,
it happens so fast. So it's based on supply and demand, but the demand happens so quickly on that. So I paid attention for all of my future properties that I put in since then. I've put a handful in since then. I have blocked off those days before we did our pricing strategy, and then I priced those days.
Yeah, what's the next one? Morgan Wallen. That's another one of the crazy ones. That's like, pit tickets are $1,500 a piece, something crazy.
Yeah. So, but the answer, here's your request. So a good pricing software is going to adjust for events. So sporting events, daily demand, actually, it adjusts for. So, and you'll see that. And then there's pricing strategy that depends on what your risk tolerance is, that I adjust seasonally. I adjust based on days of the week. I adjust based on gap periods and orphan days. So my pricing strategy will change almost daily based on bookings. So I could have a booking come in, which will change my entire pricing strategy for that property. And I could have a booking cancel, which would change my entire pricing strategy for that property on multiple levels. So it could be a booking that came in that left 1 or 2 days vacant in between, and it filled out maybe 7 to 10 days or whatnot. And that would change my pricing strategy for the month and going forward. And then it also changed my pricing strategy in the short term.
And that's all automated.
You can automate it, but it's not something that's just set it and forget it. You have to be on top of it. You have to pay attention to it.
Okay.
Yeah. And that's where a good property manager comes in.
Yeah, sure.
So, yeah.
Well, and some of the tools that are out there, I know like Turnover B&B, there's, I'm sure there's 5 other ones just like that. But when you're buying short-term rentals, so for somebody's interested in becoming a short-term rental investor, 1, obviously underwrite it correctly. 2, make sure where you're doing it, you can actually do it.
Right.
I think we're in a very unique area where, like you said, with Phoenix, we go out there 3 times a year and there's a million Airbnbs. Then you come to Tampa, St. Petersburg, and Clearwater. If you're in the city, you can't do it. But if you're in the unincorporated Pinellas, you can do it. That's definitely something to always consider. Make sure you know the regulations. But again, once you have this property, all the tools that are available, you can actually automate a good portion of it. Do you agree with that?
Yeah, you can automate a good portion. And there's a lot of systems that do not communicate very well right now. So this industry is still in its infancy. And unfortunately, because of that, it's a blessing and a curse. There's great opportunity in an industry that's emerging, but it's also some challenges in the sense that you've got different systems for your locks, for your air conditioning, for your smokers. You've got your noise monitoring machines. You got your cameras. You've got your pricing softwares. You've got your calendar management, your cleaning management. You have all these different systems that don't all communicate with each other. And it's getting better, and there's software providers out there that are starting to aggregate them, but it's not a fully automated set it and forget it system. This is right now, this industry is not a passive investment type industry. You have to actively be involved and actually continue to make adjustments because of exactly what you talked about. Regulations are changing constantly. If you're buying in an HOA community, maybe you can do it this week, and a month from now they vote that you can't do it. So regulations can change on the city level and the community level and whatnot. And then also the algorithms for the various softwares are changing too. So Airbnb, VRBO, they're changing things to help drive revenue for their company and make sure there's guest satisfaction and whatnot. So it's with a constantly changing environment, you have to constantly change with it. And that's, it goes back to the property where I had 0 bookings one month and had to make a very quick, swift adjustment.
You've said 2 things now that I think are important for some of the topics that Mike and I talk about from a tax perspective too. So you talk about it being hospitality business, not a real estate business. And that's the first time I've ever heard that, but I think that's a really good observation. But what you just said about being an active and not a passive industry is huge too, because we talk about how short-term rentals can help non-real estate professionals qualify for certain tax incentives. And you're really driving that point home because it really isn't give me a mailbox check and I'm going to do nothing. It's you're in there day to day, you're in the mix. I mean, that's to the point of the turning W-2 into active income. That's huge.
Right, 100%.
So, yeah.
Right. Yeah. If you want to go down that path, you absolutely can. If you want to make it mailbox money and hire a professional management company, you can do that too, or a hybrid of it if, to make sure you qualify for some of those tax incentives. But yeah, certainly.
Well, I think what it boils down to, especially as you start seeing a lot of this competition ramp up, is guest experience, reviews. I had a friend of mine who knew someone at Airbnb, and they said, they shared a little bit about the algorithm, which of course changes all the time, but they said, you don't want to be the cheapest house. You don't want to be the most expensive house. They make more money when you make more money.
Correct.
But you don't want to be the guy that's just ridiculously overpriced. But I'm sure the algorithm, not only just for your guests, because every time we go anywhere and use Airbnb, I'm looking, what have previous guests said? And there's always, a lot of people, I think, look at the reviews probably as the number one metric of which property they're going to book.
Yeah, absolutely. And it's interesting. I have an agent that I'm close with that I just saw her post in one of the Facebook groups the other day that this past weekend, somebody had a party at her house, 50 people at the house, rather, not 50 people at the house. And she was asking the group what she should do about this because she wanted to fine them because there's a no party clause, but she didn't want a bad review. She was scared of getting a bad review. And that's a delicate balance there of how to handle that. And you've got to have that experience and know how to handle that. But the irony of that is her Airbnb rating was one of the highest ratings I've ever seen. She had like 50 reviews and like a 4.96 rating, right? So she's a spectacular host in regard to the experience that she's providing, right? So I'm not as nice, right? That's a fact. I mean, if somebody is going to do that, I am going to, charge for any kind of damages. I am not afraid of a bad review because I'm a firm believer that you have to be so good at the value that you are providing people that when that one bad review comes through, you have so many positive reviews to drown it out and they look like the alienated party.
Right.
It's like, what's wrong with you when I have 100 positive reviews and you're nitpicking about something that happens? Like,
well, typically it's going to be something they did too.
Right.
That's the thing. It's like, how many times do you go to a restaurant and leave a positive review?
Mm-hmm.
Very rarely.
Right.
But you have a bad meal or bad service, then everyone's talking about it. And I feel like if you leave someone a bad review, all of a sudden, oh, well, Kevin's property was terrible. It's like, guys, I mean, I have 1,000 good reviews and now you did something wrong, but you're going to still retaliate back.
And generally speaking, it's something happens to the property. No property is perfect. Everyone, knows whether you're renting or you own your property. The house you live in is not perfect and stuff happens. Stuff happens that's out of your control. It could be the weather, changes and all of a sudden there's leaves in the pool that day and they checked in and our pool company didn't have a chance to come clean it out before. Okay, fine. So they're complaining about whatever they can complain about and looking for some sort of a refund and learning how to navigate through that before you just give away, 50% of your revenue for the night or whatever it was. You can't do that. You have to understand how to navigate through that, how to set expectations for those guests to where when something goes wrong, there's a protocol to fix it. And therefore, it doesn't negatively impact your reviews. So
yeah, that's a good point.
I've told you this story before, but about a year ago, I was sitting on a panel and there was a guy in there that did some short-term management stuff. And he was talking about, sort of like their reactions to what they do in those events of like a big party or you have a problem guest. And he said the number one thing that they found is they have all their thermostats on a Nest. And they'll yoke the AC to the heat turns on basically. And he's like, you all of a sudden those people start calling you and you're like, get those people out and we'll turn the air back down. So
back.
yeah, I hadn't heard that one. That's
so I was just curious if you have any secrets like that.
That's a great one though. We use noise monitoring software and we use cameras, and then we've got software where we can instantly change the door code on the front, the front door.
Yeah.
If they're already in the house, then that presents a little bit of a problem and whatnot. But we're very upfront about a no party policy. Nobody that is not a registered guest is allowed to be at the property ever. Mm-hmm. And we have one of our photos, we have, a photo set of 25 photos or whatever. And one of our photos is a giant red circle with no parties, at the property. So it's very clear that if you break one of our rules,
well, that's insurance based too, right? I mean, your insurance doesn't cover additional people other than the guests. At least that's what I've seen a lot of the property managers.
Yeah. And so, on that point, I mean, that's another thing for investors to understand is that the insurance that you traditionally carry on a residential property is not going to cover short-term rentals. So, the different channels have their insurance policies and whatnot, but if you do a direct booking and, then your insurance policy is going to kick in if something happens. And if you do not have a short-term rental policy, then you're taking that risk.
Mm-hmm.
Well, you touched on something too, because I've got a couple more questions for you, but the camera situation,
mm-hmm.
When you have a family, they have kids, does that ever come up? Like, hey, I don't really want you recording me here in this prop. Like, imagine like you go to a hotel and there's a camera in there. You're going to be like, this is really strange. Ask, who is it? Eric Andrews or Alex Andrews, whatever.
Aaron
Andrews.
Aaron Andrews, yeah.
But she didn't like it. So, I mean, I don't know how many other
situation.
Yeah,
those cameras might be a little different. These aren't peeping Tom cameras.
Yeah, these are not. No. So the policy basically, and it varies state to state. So you do have to understand your state's policies. But in Florida, you are allowed to record even pools as long as you are disclosing that there's a camera on the exterior of the property. You may not. Well, Airbnb's policy is you can actually put a camera inside the common areas of the house. We choose not to do that. I think that's a little overboard, but we do want to protect the exterior of the property. And we simply explain to them, look, the cameras are in place for your own personal safety, as well as the safety of, your family and whatnot. If something were to happen in that pool, we want to know exactly what happened. And we don't monitor the cameras unless there's an incident, unless we have a reason to monitor it, then we're going to. And we describe that your privacy is protected at all times, but in the event we need it, it's there.
Or you could subscribe to his OnlyFans ad.
That's right. That's right.
Okay, maybe not. All right, so I'm giving you a crystal ball. What trends are you going to see this year, next 5 years in short-term rentals?
That's a tough question. I think the path that we're going on with the saturation, it's going to weed out the poor operators and those that are doing, say, a rental arbitrage and their numbers are tight and their landlords decide to increase rent, they're going to end up getting out. I think folks that are not professional and kind of doing this as a hobby are going to feel the squeeze. There's going to be a lot of compression coming in. And I think Wall Street's going to come in, and they're already starting to come in. So for those of you that have been around long enough and were investing about 10 years ago, you remember when Blackstone and some of the major hedge funds came in and started buying single family rentals. And they were, and I'll tell you a story about this. I happened to meet one of the principals of one of the largest, 4 in the country. And she was tasked to come down to her task was to buy 20,000 houses, and she had $3 billion to spend. And I happened to meet her the first weekend she moved to Tampa. And I thought I was hot stuff because I was, an investor, and I was throwing off 20% returns and all this stuff. And I was, my cap rates were through the roof. And we sat down in my office, and she said, no, I just need about a 4 or 5 cap. And I'm like, what do you mean? Like, what's wrong with you? I'm getting 20. Why do you only want a 4 or 5? And she looked at me and she kind of chuckled. She said, Kevin, you only have 300,000 to spend. I have 3 billion to spend. Right. So their tolerance for risk was drastically different than mine, and put me in my place real quick. Right. So Wall Street is going to come into this space, and they are already doing it with some of the management companies and the lending on it. Lending is loosening up in this space, which is allowing, more investors to buy them and leverage them up and whatnot. And there's actually securitization of some of those loans, which means that the investment's already taking place. So it's only a matter of time that instead of investing in the loan, they're going to actually buy the asset. And when that happens, once again, the cream of the crop are going to have to be very tight with all of their systems, because, you're competing with people that have a heck of a lot more money than you do and have a heck of a lot more patience and tolerance for risk and experience and systems and everything. And they can move markets. There's enough money to move markets. So.
What does Wall Street's entrance into the management side look like currently?
There's some large players right now that are managing 10, 20,000 doors right now. Okay. In fact, I was at a conference. I was a short-term rental conference in Miami 2 weeks ago, and all the top players were there. And there was a panel where a gentleman was talking very candidly, and he was talking about diversification in different markets and how important it is and whatnot. And I do believe that's very important. And he just very coy, he said, yeah, we just lost 400 doors in Fort Myers Beach. They were managing 400 doors in Fort Myers Beach. And he said, those doors are never, ever going to come back. Right. So if you are concentrated in a market, and that hits home to us, because, that one slight shift, that hurricane could have hit us.
Well, his parents lost their house.
Yeah.
Okay. I didn't know that. Yeah. I'm sorry to hear that. Yeah.
And we were just at a mastermind last week where one of the girls there, she had bought an office and literally just finished rehabbing it. Gone.
Yeah. Wow.
And she evacuated, and she's thinking, man, I'm going to come back. I've got a pretty sizable real estate team. I'm going to have nothing to sell. And for a lot of those people, it's still that same scenario. It's sad, but.
Yeah, absolutely. And so, I'm the type of person, when you're analyzing a deal, when you're forecasting the future, it's interesting, because if you were raising capital right now, or you're thinking about investing in a fund, and there's an offering memorandum or a private placement memorandum, in that memorandum, it talks about all the risks associated with that investment before you give them that 100 grand, 200 grand, whatever it is, 50 grand. But in the short-term rental space, the barriers to entry are so low that people are making that $50, $100, $200,000 investment without understanding all the risks. And it's important for you to do that. And once you understand them, once you mitigate those risks through, knowledge, technology, whatever it is, could be joining a mastermind session, and you don't have to pay $10,000 to go buy some mastermind session. I am not a guru selling any kind of courses here. It's just educating. Once you've done that and you accept that risk, then move forward and it's okay. But once again, going back to that seminar that I was at a couple weeks ago, some of the larger players were saying if you keep a diversified portfolio of about 75% long-term rentals, 25% short-term rentals, your short-term rental income is actually going to mirror your long-term rental income, and you can scale a lot quicker with a lot less risk.
Given all the things you talked about for the last 45 minutes,
right. Yeah.
You can't just jump into it. And what you said kind of makes me think about, remember Clearwater Beach 10 years ago or 15 years ago was pretty much all mom and pop kind of rundown hotels. And now you still have a few boutiques, which is going to be the guys who actually deliver that experience. And you have the Renaissance, the JW, like those kind of, and all those crappy hotels are gone. And I think that's kind of what you're saying. Like as this progresses, the people running.
Well, think about that repurposing opportunity for some of those smaller motels and hotels, that are just going to have way less occupancy.
Oh, yeah.
Yeah.
I mean, we're seeing that already, I think.
Yeah.
Yeah.
Especially with the competition. I personally would rather choose a short-term rental if I'm going to go somewhere than a hotel.
Right. Absolutely. And it's a different experience too. So I use that analogy in the beginning here just to make people's mindset think that way, that it is a hotel, the miniature hotel that you're running, but you are not truly, there is some competition with the hotel, but you are providing a different experience for that guest, right? And if you're renting a hotel, you might be paying the same price per night, but you don't get 2, 3, 4 bedrooms. You don't get a full kitchen. You don't get a full refrigerator. You don't get the other amenities, a private pool or a hot tub or whatever that is that you're getting. So while there is some crossover competition, you are providing a higher quality experience for the same amount of money if you do it properly.
Yeah.
I was chuckling to myself as you said that because I was just in St. Augustine with my family, and I've got a 1-year-old and a 6-year-old. And my wife was like, we are literally going to bed at like 8:30 because you're in this hotel room and the kids have to go to bed. And I'm like, well, there's nowhere for us to go.
We can't leave them here by themselves. They're going to wake up and freak out.
That's the most sleep I've had in years.
Exactly. But, had I had one in that market, I would have had a pack and play waiting for you and some pool toys for you, and would have had, game machines for the kids to play, and you can enjoy yourself.
No, for sure. Well, you've given us.
I'll have one question before we sign off there, Mike. I wanted to pick your brain on the regulation side. So the number one question I get about Airbnbs is the regulation side. Can we do it? Can't we do it? And every time my answer to that is, it just depends, which I mean, typical lawyer response, right? But there really does. You go out to the beach. Each small municipality has their own set of rules, has their own requirements. If this is a industry that bigger and bigger money is coming into, I would have to think that the horizon of that is going to have to be somewhat, systemized better so that there is actual uniformity among things. Do you agree with that? Do you get involved at all at this point on any of I don't know if that's lobbying per se, but any of the regulation side of things?
Another great question. So regulation, as you said, varies from municipality to municipality, and it's going to take a lot to unify that. However, and I've experienced some heat on some of my properties from neighbors and from code enforcement and various things. And your initial instinct is to fight back and say, no, the demand for this is so far greater than the regulation that it's gonna blast through, and people want this, so it's gonna happen, right? Kind of like with Uber, right? Before Uber came out, you would never think about getting in a stranger's car and having them drive you to the airport, but now you don't bat an eye at it because the proper systems were put in place. So regulation is from a financial standpoint is not necessarily a bad thing. Okay. I actually believe that in our market, there should be greater regulation, right? Not necessarily with the length of stay or whatnot, but the greater regulation with the barriers and the safety aspects and to keep the neighborhood happy and whatnot, being a good neighbor. And there's other markets that have figured that out already. So each market, each municipality is in a different place. There are lobbying firms right now that are working on. Once again, I had conversations with some folks that are doing it on a national level, and they're getting paid to do that on a national level. And so paying attention to that is very, very critical for your own tolerance for risk. And the lenders that I was referring to earlier, they will underwrite the regulations of your property before they give you the money on it, because they want to know worst case scenario. If you have to turn this into a midterm rental or a long-term rental, what is their risk? If they have to take the asset back, what are they going to end up doing? So it's definitely being monitored. It's very segregated right now. I agree with you that it should trend towards some sort of uniformity, but I think we're a long way away from that. So I think you really have to analyze it on an asset.
Well, some of the
asset
areas
basis.
where you see permits being issued, I like that idea.
Right.
Because then it's like, to get a permit, I have to show that I have the right insurances, which will check the box of safety. Right. You know, you're going to pay the right taxes back to the city. Because I know that that's a big, oh, well, I've got a hotel tax and this guy's not paying me anything.
Sure. Yeah. Yeah. This industry can certainly self-fund any type of regulation that would be entered by a municipality. But to your point, the areas that are issuing permits, then you see a higher saturation of properties, because unless they limit the number of permits that get issued, then all of a sudden, okay, total green light, let's go. So that's where the financial side of it comes in. Like some regulation that is holding back a massive investment in that area, it could be good for the ones that are in right now. So, but you've got that risk. I know people in our market right now who have been fined $20,000-$30,000. Yeah, and they chose
we know the same people.
That's right. They chose to do things that caused that. So anyway,
it's not great when the city council member is your backdoor neighbor and you tell him to F himself. That's typically not good for the fine structure in the future, but that's just one of the stories I know of. All right, guys. Well, hey, I appreciate everyone tuning in. This has been Kevin Byrne on short-term rentals and a whole lot more. Until next time, we will be moving onward.
Thank you for joining us for another episode of the Legacy Wealth Code Podcast. If you enjoyed this episode, click subscribe now and never miss an episode. Until next time, onward.